afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This is our 571st video, baby. Yeah. Traders, this video is being filmed for you on Monday night for trading Tuesday, April 13th, 2010. Traders, as you know, the new mandate from Big Brother states I have to repeat something that at the beginning of every video. It's a warning. So I thought, being that we live here in Vegas, I'd get one of our Vegas stars to join me tonight. So I have one of our stars from local town here in Vegas that's going to come up and do the disclaimer for me. Would you come on in, please?
Number one, futures trading is risky and can cause substantial financial loss. Number two, trading futures is not suitable for all trading accounts. Number three, past performance is not necessarily indicative of future results. Elvis has left the building.
Thank you for your help on that one, Elvis. All right, so now, Big Brother, we've got that covered. Let's get down to some business. Traders, here's what we're looking at for Tuesday's trading. Right off the bat, neutral Omni for the U.S. indices. Why would that be neutral? Well, we're quite bullish the U.S. indices overall, but we had a little phenomenon take place by the close today on Monday, and that was a swing day was left in some of the U.S. indices. But the problem with this particular swing day is that it was just too small of a swing day. I say it's not qualified as a swing day, and I will show you why. Traders, I've shown this to you many times before, but a swing day looks a lot like this. The market has a day where it goes up. The next day rallies up, turns around, breaks down, and settles by the low of the day. That's what we call a swing day, and on day three, we like to sell it right about at the highs of the first day and expect a breakdown. That's what we would like to do with swing days, but in this case, traders, here's what we have. The swing day is a little teeny day about this big. I don't know that we can qualify that as a swing day. It's not one that I would usually trade as a swing day. So, Omni says not qualified as a swing day, and I'll show that to you in a chart momentarily. Next on the board is, do not fall in love with the upside of the euro. Traders, the last 2 days we've seen the euro have a nice big pop, right? Well, it's been going down for weeks and weeks on end, and the fact that they decided to help Greece is not going to change this planet very much, and it's not going to change the fact that euro's still on its way down. So do not fall in love with the upside of the euro, and I expect that by this week's end, if not sooner, this 2-day rally that we've seen, or day and a half rally that we've seen in the euro, will have been seen as a selling opportunity. That's what I think the euro's in for this week. So don't fall in love with the upside of the euro. And I have some charts for the euro I'd like to show you. So with no further ado, let's go look at some charts. Okay, traders, the first chart we're looking at is the NASDAQ June daily bar chart. And this is what I consider a poorly defined swing day. What I mean by that is this. As I just showed you on the board, a swing day would look like this, where it opens, drops, has a pretty decent sized day, drops, and settles by the low. But this, what we have here, is a day, and then the swing day is just a little dash right there and a settlement in the middle. And you know what? That is not considered a swing day, so don't be fooled by what looks like could be a swing day in the indices. Even if it acts like one, that's not qualifiable. That is not a swing day. We are still inside of a very nice parallel channel. We are still buying dips. We will not take a sell signal, at least on the onset of trading for Tuesday. Let's look at another chart here, traders. Okay, traders, we're now looking at a euro currency daily bar chart. This is the June daily bar for the euro currency. And I want you to look back here with me. Do you see any gaps in this chart? See any gaps here? See any gaps here? See any gaps here? See any gaps here? What do you see right there? A gap, right? Well, gaps are not very commonplace in a euro currency chart. So what needs to happen, even if euro did want to go up, is this gap needs to be filled. That means we need to come back down in the euro, and I think when it comes down to fill that gap, it continues to head lower. That is my assessment at this point in time on April 12th on Monday night for trading on Tuesday, April 13th. My assessment is the gap gets filled and then we break even lower, but we'll take one day at a time. Let's see the gap get filled first. Again, traders, no gaps anywhere on this chart until that one. Not commonplace at all. I think the gap needs to be filled. Traders, pull your own charts, do your own homework. I'm sure that you will see the same thing I'm showing you here in the euro, and certainly you'll see that the little days in the indice charts were not qualified swing days, and we can't take them as such. Okay, traders, so you've seen those two charts. Traders, look, I can't qualify this as a swing day, and I said in yesterday's video, or in the weekend webinars video, the one just before this, I was going to sidestep sell signals for the next few weeks and see what happens there. So a swing day would be a sell signal. In all honesty, though, a swing day is a swing day is a swing day, and I just take them. I don't consider them sell or buy signals. I just consider them swing day signals, and you take them. That's not qualifiable, so I'm off the hook. I don't have to take a sell trade, and I'm glad for that. We'll see what happens, traders. We'll play it by ear. Of course, if we have to get into a situation where this market starts to really look bearish, of course I'll start selling it. But for now, the swing day I can't qualify. We're going to sidestep a sell signal if it happens, and we'll see where things go. With the euro currency, don't forget, traders, it doesn't belong up here. It wasn't up here. It needs to go back down. Let's see what happens with that. As we're speaking, I hear an alert going off, and that alert would be the exact spot we could sell this darn thing if it was going to be qualified. But it's not qualified, so let's not do it. You hear the alarms going off? Yeah. And I'm thinking this is the spot where we can sell this thing. But all right, let's not do anything here. All right, traders, so you've seen those charts. You know what I'm looking at. I want you to look at the charts yourselves and see if you see that very same picture. Keep your eye on the U.S. dollar. It is very important right now. If the dollar goes up, everything goes back the way it was just a couple of days ago. All right, traders, that's about all I'm going to do in this video. I'll see you hopefully tomorrow night. Don't forget, give me a call anytime day or night, 702-629-4755. Come on down to our site, traders. There's lots and lots of Omniacs that hang out in our chat rooms every single day. We give lessons there. We help one another. That alert's still going. I hear it. Oh, I just want to go out and trade. All right, so we are here to help you, traders. Come on down to our site. It's www.livewithoscar.com. All right, last thing I'm going to tell you is this. Always, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is? Stops are in. Emotions are out. Yeah. Thank you, Elvis. Thank you.
I'm going to get me a po' boy.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.